All attendees are in listen-only mode.
Okay, here we are. Thank you. Good evening, ladies and gentlemen. Here am I clicking away at buttons. I do wish people would stop changing their applications, but they do. And it's good to have you with us. Dean, you're first up. Thank you for being with us. How's the volume? Can you hear me all right? Here we are. Yeah, good day. Picked a time, picked a fine day for a webinar. Limit up corn, absolutely. Isn't it beautiful? Lovely TO3 plus signal and a time signal. Limit up, wonderful. Love it all. Raj, good to have you with us over there in next to New York. What's it called? I'll think of it in a moment. Good to have you with us there. Norbert up in the cold, cold north. There you are. New Jersey for Raj. There you are, Raj. Sorry that it was not right on the tip of my tongue, but welcome all of you. So you hear me all right? That's the main thing. Volume's good, and we're ready to go. Well, we're as busy can be today. It's got so much to talk about, so let's get going. Let's see who's here to start with. Most of the regulars are here, as they always are. Adrian's with us. Benjamin's with us. Bob, who's a new member, been emailing with Bob. Good to have you with us. Chris, of course. Let's see here. Here we are. Oh, Dan's with us, of course. Good. Dave. The other Dave, he's a tutorial guy. Dean, of course, he's presently our standout trader. He's the guy who doubled his account, not on margin, doubled the whole account in August last year, made 80% on his account in September last year, and then stopped telling me what he was making. He's a very respectful Christian man, and he said it would be boastful to tell you what I'm doing. Interesting story. Dean actually came to a tutorial in Colorado Springs many years ago, maybe 2011, somewhere around there. And I was only teaching price at that time, and then he came back a couple of years ago and said, I want to do another tutorial. I want you to teach me about trading time. So he now trades Danielcode time exclusively and is doing very, very well. Hello, Adrian. Good to have you with us, my friend. Gary is with us. Let's go on. Here we are. Got a big turn up today. George is with us. Gig is with us from North Carolina. Good to have you with us, Gig. Greg's with us, the other Greg, a wealth manager from Colorado Springs, whose son knows what fortnight means now. Just said, here we are. What have we got from Jean? Good morning. I am Jean Philippe, living in Kuala Lumpur. Just started 14-day trial. Excited. Good on you, mate. We'll teach you all about that as much as you like. Jeff's with us, both of them, two of them. Joel from Vero Beach. I don't remember that. Mark L is with us, of course. He's never misses. He's with us all the time. Martin's with us. Murph, of course. Murph, hello, my friend. We had a chat last week, I think, sometime. Nathan's with us. Peter, Raj, yeah, here we are. Randy, Rocky, welcome, Rocky. I think I either spoke to you or tried to speak. Yeah, I spoke with you last week ago. Rolf down in Melbourne. He's a new member who's an old member. He's been with us on and off for years and years, but he's here today. Welcome to you, Rolf. Roy, of course. Scott, Sean's with us. Stuart, Stephen, he's with us. He's a tutorial guy. So's Trevor, and William, who's got a Danielcode tutorial meeting with me tomorrow. Good to have you all with us, guys. Anyway, wonderful to have you here. So let's move on. It's a beautiful, beautiful day in Canada, according to Dean, I can tell you it's an even better day at the Gold Coast, mate. It's the start of autumn. It's still swimming weather. It's beautiful, bright sunshine. Pacific Ocean is blue and wonderful. It's a fun time to be a trader. It's a fun time to be alive. And the trading, of course, as Dean pointed out, has been fantastic. So here we are. Markets are rational, orderly, and sometimes predictable. And the Daniel Code is a set of ratios control time and price in all markets. Big statement, isn't it? The fourth seal, folks, just to remind you, here we are. Norm is saying frost warning for tonight. Yeah, well, your choice to live there, mate. I know where you live. It's a beautiful, beautiful place, but oh, me, I can't stand that cold. I lived in Taupo, New Zealand for about 13 years, right in the centre of the North Island, and Taupo sits on a giant lake, Lake Taupo. It's marvellous. It's a freshwater lake because it sits just below the mountains, the snowfields, and it's all snow melt. It's 1,000 foot deep. It's about 180 kilometres round. I mean, it's a big lake, I'll tell you. And boy, it was beautiful, but the cold weather over there, no, not for me. A family just all loved it, you know, from where we lived, right on the edge of the lake. Where we had our house, you could just look out the front door and look up at the mountains and see what the snow looked like. And if you liked it, you were 40 minutes and you were on your skis. Pretty fantastic for those of you who like skiing. Now, the fourth seal, folks, make sure you subscribe to the fourth seal and reading Frank DB's weekly update published every Monday, particularly the S&P. It's in a vital period coming up in the coming time frames, and Frank each week is giving us the vital go, no go signal each week. The S&P is on a particular pattern. It's tracking a particular pattern from a long time ago. This is real long-term analysis. And every week, Frank is telling us whether it's matching that pattern, the one we have been tracking and expect it to continue, or whether it's switching to another pattern. So that should be the first thing you read on Monday. And if you haven't read Frank's long-term forecast, you should. They're under a tab at the Danielcode website, just simply called Articles. And his two articles are simply labelled 2000 and 2021, respectively. He wrote the first of those articles in December 2019. And basically said no dramas in 2020, just onward and upwards, and much the same for at least the earlier parts of 2021. So, you know, the fact that he basically kept us long all this time, he deserves huge credit for that. But, of course, we think more is to come. And even during that February 2020 flash crash, 23 days into bear territory, Frank, in his weekly postings, was saying, the market's going to make new highs. Markets are going to make new highs. Pretty gutsy, wasn't it? Anyway, there it was. Now, there's not a automatic subscription tab for the fourth seal on the Danielcode website. So if you'd like to subscribe to the S&P for the fourth seal, or gold, or oil, or all of them, whatever you wish, contact Terry at support@thedanielcode.com, and he will send you an invoice so you can get started reading that. Very, very important right now. Okay, so while we're having great fun being traders, the world, the trading world and the financial world generally, is full of problems. And we love problems. Markets, you know, the old saying is they climb a wall of worry, but don't forget that they go up by the stairs and go down by the escalator. But a month ago I talked about inflation and noted that nobody was talking about it. The following day, the 7 newspapers and websites that I scan every day, no less than 5 of them had an article on inflation. And there's been a lot of comment about inflation lately, and it's a subject that economists love to talk about and argue about, because no one really agrees on how to measure it. The way the government measured it, the official figures, that defines out all the volatile elements, including food. So it's as much use as a sick headache. I think real inflation is running near 14%. If you haven't noticed the cost of almost everything you buy on a daily basis, I'd be very surprised, and I think that that's a huge problem coming down the track. But it's not a problem yet, and as long as it's not a problem, then we can just think about it. The next problem, number 2, is housing prices. Housing prices have gone absolutely nuts. Now, I'm only talking here about US prices, because most of you are in the US or Canada, but in our capital cities, the 2 biggest cities, capital cities, Sydney, which is the capital of the state of New South Wales, and Victoria, which is the capital of the state of Victoria, average house prices are like $900,000. You can't believe it. In my street where I live on the Gold Coast in Queensland, and it's not a very big street, it runs into a couple of dead ends, but there have been 4 houses put up for auction in the last month, and not one of them has made it to auction. People have bought them before there's even an auction. So, I mean, how do you do that? You say to the agent, what's the reserve? And if he'll tell you the reserve, you make an offer better than the reserve. I mean, it's absolutely nuts. Now, property prices are a function of interest rates, and we're all, the Western world at least, has got very, very small interest rates. You know, that's a function of the cost of all assets, because it affects the rate of return and the comparable rate of return. And there's a long and interesting discussion about that. But what happens when interest rates rise? I know people who are paying $6,000 and $8,000 a month in interest, and I've got a pretty good idea what those people earn, and I don't know how they're doing it. It's extraordinary. The whole thing is extraordinary. Absolute nothing houses that honestly you wouldn't want to go into them, let alone live in them. The prices they're making it simply to knock down and rebuild are extraordinary. I mean, this is 2017 on steroids, folks. It really is. And of course, as you'll see in a moment, the Fed's the wrong way in this. The next problem, of course, is the share market. It's near all-time highs. When will that matter? Valuations from Goldman Sachs show the market to be at or near the most expensive levels in recent history on most measures. There's a distinct greed hive that's buzzing with option speculation, engineered short squeezes, heedless momentum buying of marginal illiquid stocks. It's extraordinary what's going on. And, of course, spend a bit of time thinking about the story of SPACs. These are special purpose acquisition companies. Essentially, they're just a shelf company. And they raise money. And look how much they've raised, $70 billion in equities. That was in 2020. 83 million from 248 IPOs. And they raised this money without, just on good faith. Send us your money and we'll find a decent business to merge with or to buy. And it's totally and utterly speculative. You put your money in and you have no idea what the underlying asset is going to turn out to be. And of course, needless to say, most of them that have floated are now underwater. And that's telling. The next problem, US government spending. I mean, I'm not picking on the US, I'm just giving you the figures on the US, but boy, the same thing's happening in Australia, England, Europe, most Western countries. Just massive spending on COVID. And then on top of that, more massive spending to try and prime the economy, keep it going. Have a look at these figures. These are billions, of course. Look at this. Look at this. What's happened in the last few years? 100%. of GDP, 102%, 104%, now 129% with more to come. I mean, it's like the whole world has, well, my father always used to say, money doesn't grow on trees. Well, that's definitely, a lot of our political leaders seem to think it is, but sometime or other, I mean, this debt's getting serviced because interest rates are minimal, very minimal, practically near zero for big government and big corporations. But boy, sometime or other, interest rates have got to go back to normal. Who knows when? But it's going to be a shock when it happens, a big shock. Here we are. Okay, let's keep going. You've seen all that. Now, cryptocurrencies. This is really interesting, folks, and I'm going to show you a lot more about cryptocurrencies today. It's not something I've had any interest in, to be honest with you, but recently I've had a number of clients ask me if I've ever traded crypto and whether it responds to the Danielcode ratios. And I had a crack at it, maybe was it last two webinars ago, I think. I had a crack at it initially. And what I'd actually picked up was one of the coin markets instead of the actual Bitcoin market. And since then, I've spent a couple of days trying to learn a lot more about Bitcoin because to us, it's a valuable market because it's got so much volatility. And it's consolidating at the moment after a mini crash. But big volatility means big daily bars, and that's what sort of superpowers our trading. So I think Bitcoin's here to stay, and I think that Bitcoin itself, there's no real trouble with. I think what the inventor Satoshi has, what he's invented with Bitcoin, particularly with the blockchain technology, is quite incredible, and it's the only market that is running without oversight or support or otherwise by government entities. It's really the last bastion of a free market with a few limitations. Those limitations being that even though Bitcoin and the other major coins have been well distributed in recent years, the major holders, the big players, still effectively, in theory at least, control this market. The one real risk to Bitcoin is what's called a 51% attack. If 51% of Bitcoin holders decided to make a concerted move, well, that'd be killing their own goose, because that would be a real problem for everyone. But we do know that the miners, the people who mine these Bitcoins, between them the majors, they control somewhere near 40% of all Bitcoin. So it's not really yet a properly distributed market, but nonetheless, I've had people asking about it. So I spent a couple of days this week digging into it, and also the other popular coin, Ethereum, which the CME has now bought out futures contracts, which is a huge move, futures contracts for Bitcoin and also for Ethereum. The one on Ethereum is called Ether on the CME, and it's bought out futures contracts. So I think the big risk in Bitcoin is not Bitcoin itself. It's all of these support mechanisms that clever men in the interest of making money have built around it. And one of the most obvious to think about is a company called Tether, which is one of the major players in the Bitcoin market. And it issues its own coin, and it's considered to be a stable coin. But if you just follow their history through, and this is all very cursory, but they started off by saying and guaranteeing that every dollar of their coins was backed by $1 in US currency. They then switched from that, the great switcheroo, and they said, well, no, it's not now, but it's backed by US dollar currency and intercompany loans. Well, I'm an attorney, I'm an old attorney, and I know a whole lot about intercompany loans. And basically, they're for reasons that happen primarily for reasons because there's a shortage of funds somewhere in the system. So let's have an intercompany loan. Now, none of this may matter, but it's something you should at least be aware of, that they've been fined by the Attorney General's office for all sorts of issues about compliance and keeping the market informed, but very small, interestingly enough, only $16 million, virtually nothing to a company the size of Bitcoin. But they've for years and years, they didn't do an audit, didn't issue a public audit at least, and the Attorney General, this would be the New York Attorney General's office, forced them to undertake an audit, which is not entirely satisfactory for the same reason as I've just talked about intercompany loans. The audit talks about the other securities that are backing its currency, and it's not clear what those, the details of what those other bonds, etc., are. So an interesting article from Sprott Money out today. Sprott Money, for those of you who don't know about it, Sprott's a Canadian gentleman who's the original gold bug, and he became famous for a lengthy dissertation proving that COMEX gold was manipulated. Well, of course, he's a gold bug. His great interest is in bullion, always bullion. I think that he basically thinks the futures market is the spawn of the devil, but I've read his stuff, and I'm on the other side of that argument entirely. All markets are manipulated to some extent or another, and you know, we treat gold as a commodity. Harold will shout at me shortly. He's a king of the gold bugs from Redding, California. Welcome if you're with us today, Harold. You normally are. But anyway, so Sprott Money says that Bitcoin can't survive. He says the source of central banks' power is their total control of the world's money supply, and asks the question, do you honestly believe they're going to allow anyone or anything to undermine that total control? So what he's opining is that governments will more and more intervene in Bitcoin, and they will not allow it to ever challenge their own fiat currency or their own coins. Many countries in the world, India is one of them, China's another, have their own coins in competition, if you like, with Bitcoin. So that's his take. My take's exactly the opposite, which won't surprise you. I'm usually a contrarian. I think the more that we see efforts to ban Bitcoin, the hotter it'll get, because it's got that wonderful thing about it that handled properly, it's totally anonymous. And you know, people like to keep secrets. People don't want the world to know where and what their money is. And yes, of course, it's also been the go-to product for ransomware, you know, cyber attacks paid off in Bitcoin. So there's a fair bit of criminal activity going on in there, but there's criminal activity going on in most places. It just doesn't get seen. It's what we're seeing with Crown casinos in Melbourne and Perth, the supposedly a company of the highest fiscal integrity, and now turning out with the Royal Commissions we're seeing, which are inquiries, they're legal inquiries into Crown, that there's been money laundering going on just pretty much unabated. It's just been a gravy train for people with ill-gotten gains who wish to turn it into something respectable that they can then go and buy their Lamborghini with, you know, tell the tax commissioner I won it at the casino. Yeah, right. But I'm completely on the opposite side of Sprott Money. I think the more they try to ban Bitcoin, the harder they make it, the more attractive it'll become. And I think we're going to see that. I think Bitcoin's with us for a long time. So it's worth knowing something about it. You may even get to the stage that you're interested in trading it. And if you are, you'll be interested to see how it reacts to the Danielcode numbers and ratios as we move through this webinar a bit. So the next problem is commodities. We've just been having the most marvelous run in commodities from a trader's point of view, but have a look at some of the issues here. Commodities have been on a tear, we all know that. Expectations of it have underpinned the commodities, expectations of economic growth, greater need to compensate for inflation risk. There's that word that no one was talking about until a month ago. We know some of the issues. Lumber futures prices are up 77%, and there's a shortage of lumber. Many builders just can't get it. They're putting clauses in their building contracts saying, subject to availability of timber. We've never seen that before. Here are some of the comments that some of the people who follow these things are saying. Iron ore, of course, is immensely interesting to me. Australia is the biggest exporter of iron ore in the world, at this stage primarily to China, and Australia and China are having a spat at the moment. Australia banned Huawei from the 5G new mobile network, saying that it was not secure enough because of the obligations of all Chinese companies to allow access to the Chinese central authorities. So that upset China so much that they've left, I think there's 112 coal ships anchored off the coal ports. They've refused to take delivery of millions and millions of tons of coal, the vast bulk of which is Australian coal. They've put 200% tariffs on Australian wine, so that's not going to China anymore. They put a complete ban on Australian barley and a few other things. So Australia and China are having a very hard spot in their relationship at the moment. It's a really interesting subject that I'll do a whole webinar on, the way China's infiltrated Australia, buying really key assets like the Port of Darwin, our major port in the north of Australia, now owned by a Chinese corporation. What it's been doing with its Chinese students, the diaspora as it's called, all over the world, but particularly our universities have been focusing on Chinese students with hundreds of thousands of them, just masses of them, which is good. I mean, Chinese generally as a nation, they're hard-working, they're diligent people. They make great citizens for any country, but there's a whole lot of them that are still controlled one way or other by the Chinese government because they still have relatives back home in China, and nothing's too tough for those guys. You can believe that. So here's our look at Bitcoin and Ethereum, folks. So interest should be that there are now futures contracts. There's a big Bitcoin futures contract. The margin on that 76,000. But there's a micro futures contract, the margin of which, when I wrote this a couple of days ago, was $1,500. The Ethereum futures contract is called Ether, and that margin is 36,000. Interesting things to think about. Bitcoin and Ethereum, all these cryptocurrencies, they trade 7 days a week. So they trade on the weekend, and they trade during public holidays. Whereas futures contracts don't. Futures contracts trade 5 days a week. So if you want to trade Bitcoin futures, first of all, you have to apply to your broker and say, I want to do it. He'll decide whether he thinks you're a worthwhile and solvent citizen or not. But if you do get into trading it and you want to hold a position overnight, you need to have an extra 25% of the margin in your account. And if you want to hold a Bitcoin contract over the weekend, you need to have an extra 50% of the margin available in your account. And the NFA, which was the National Futures Authority in the US, has put out a special advisory on the CME website about trading Bitcoin and Ether futures. I haven't seen them do that before, but they're very worried about a lot of scams that are going on with the launch of the new futures products, and people promising to trade your money, and they're warning against that, and they're also warning about the massive volatility that is inherent in these futures contracts, which for us, of course, is the source. That's what we want, volatility. Have a look at this. This is a Bitcoin chart, and this is the one, the correct one, if you like, this is the tethered version of it. So you can see we had an interesting high in February and a significant high in April before the little mini crash we've had, which has knocked off about 40% of the volume of the value of Bitcoin. So this is the futures contract, and as you would expect, it looks much the same. It has the high before the high in February, and it has the high on the right date, April the 14th, with a huge sell signal on top of that, and it has the low at the right date. So these are about 3 days old, these charts. But here's interesting that this high in this margin, in this market, you can see here, was 64,000 odd. That was the all-time high, and the little crash low on the 19th of May was $30,000. So for pure Bitcoin, the pullback was worth $34,500 high to low. Now have a look at the futures contract. Futures contract, this is the big futures contract. It was worth $176,000, the same pullback high to low. Many multiples of Bitcoin, and that's because of the gearing that's inherent in the futures contract. Now, most of you will be interested, if you're interested at all, in the micro contract, which is 10% of the full Bitcoin. So move the decimal point. The pullback in the micro contract was worth 17,600, 10% of the full-size contract. So Bitcoin has days where its volume fluctuates quite markedly. You'll have days where there's good volume and days where there's very little volume. That's becoming less and less prevalent now, but to look at the historical values of Bitcoin, you've really got to go to a 3-day chart, and that's what this is. This is the Danielcode 3-day chart of Bitcoin, and you can see the blue lines that we've created. These are our standard blue lines, straight off the normal Danielcode procedures. It's had target recognition at the February high. It's had target recognition at the March high, and of course it's had perfect target recognition in the setup bar to the final April high there. And the variance from the target for that setup bar, which I've got marked, it says this is DC target recognition, the uppermost of those, it says the variance from the target was 70 points, which is 0.11%. Now, for our normal trading, futures and forex, as you've heard me say many times, the allowable variance is 0.1%, not 1%, 0.1%. That's a very, very small variance. And that's the great magic of the Danielcode, that it keeps finding these numbers so specifically that they then become setup bars. That's the first thing about the Danielcode. What it does that nobody else does, that it gives you these completely unique Danielcode numbers, which are not old highs and lows. They're not Fibonacci numbers or any other sequence that you've heard of. They're an actual standalone ratio of numbers from the Danielcode. And our website now has been running, folks, since late 2008. So for those of you who are new to us, go to the Danielcode website, and there's a link there that says Chart Archives. And in there you'll see every chart. I create all these charts for you manually. Every chart that I've created since we first released this to the public in 2008. And you'll be very, very hard pressed to find a market that's turned anywhere except at a Danielcode number. Sometimes that target recognition can come a day early, as it's happened here. Once you get target recognition, it's valid for 2, sometimes even 3 days, depending on what type of signal it's creating. But there shows you on that 3-day chart just how completely accurate the Danielcode is on it. And believe it or not, it's just as good on the daily Bitcoin chart. I sort of went through that progression of starting with a 6-day chart, then a 3-day chart, then the daily chart. But have a look at it. There are the Danielcode blue lines. They're created exactly the same way as your blue lines you see on the members charts for Forex and futures. Every, twice Saturday, Sunday, Monday, and Wednesday, I should say, I update those charts. And these blue lines are created in exactly the same way. These are Danielcode ratios. These are extensions of previous ranges. Have a look at it. Target recognition, target recognition, target recognition, target recognition. Then the all-time high. Target recognition the day before for the setup bar and at the high. And the variance, 0.11% from target, which is quite extraordinary. More often than I have seen this variance get out to 0.2%. Now, in new markets such as this, Bitcoin and Ether, it is absolutely incredible that it is so accurate with the Danielcode ratios so early. I mean, Ethereum has literally been trading for 10 minutes, as you'll see when we get to the Ether chart. Bitcoin itself has been there a lot longer, but the precision with which it tracks the Danielcode ratios was absolutely staggering. To me, at least, I was just amazed by it all because I didn't expect to see this, but here it is. So here's futures on daily bars. You can see it's April 14th, blue line trade. Right at the blue line, the previous bar gave you the actual setup, and down it went, one rally, and that was it. Here it is. This is the Bitcoin futures chart. I think that's probably the same chart. No, it's not. That's got the Danielcode retracements on it. Same thing. Absolutely standard red lines and black lines that you see every week on the members charts, and you've seen them for years and years and years. First push down from the blue line high in April, hits the Danielcode retracement at the red line. That's it. Then it rallies. Off it goes, runs into another couple of sell signals, down it goes. Where does it stop? A handful of points above the 74% retracement of a minor range. Almost exactly. Isn't that extraordinary? Let's go on. So let's have a look at the blue lines in more detail in Bitcoin. And you can see we've done the run up to the top. You saw that. Have a look what happens in the run down. Go straight to a red line, target recognition, little rally for 4 or 5 days. Next move down, it's a blue line, target recognition at the blue line. Off it goes, rallies for quite a period up to its next sell signal. Then it starts running down. You get a 1-day counter trend and bang it, let's go. Now, this is exciting times. This is dynamic. This is supposedly a panic. This is like end of the world stuff for people who've bought Bitcoin recently, and it's full of drama and it's full of panic, and you don't expect markets to be accurate. But here's the big but. The crazy thing about the Danielcode, amongst many other amazing things, I should say amazing rather than crazy, is the more volatility there is, the more accurate the Danielcode ratios are. So this market crash, where did it go? It ran exactly to a Danielcode blue line on top of a Danielcode red line. And that stopped it like it was shot. And then the rally back where that bar closed, the big bar, you can see the last down bar, the close of that bar was exactly at another Danielcode blue line number. Extraordinary stuff, isn't it? Okay, so this is now Bitcoin futures. We've been looking at the actual Bitcoin. Now we're looking at the futures. Exactly the same thing. Blue line sell signal set up not on the bar you can see at the blue line, but the previous bar, which is another blue line. valid for 3 days. It got elected 2 trading days later. Down it went. Look what happens on the way down. Hits a blue line, causes an inside bar. The last day, the crash day at the end of the crash down, hit the red line down there. Look where it closed, right on the blue line. That gave it target recognition. Since then, there's a few days missing from the end of this chart. It's trying to rally very weakly, but exciting stuff when you look at the daily ranges of these bars. Boy, I mean, it's a wonderful trading instrument if you know what the Danielcode numbers are saying. If you know the Danielcode on Bitcoin, because nobody else does, this is tracking. It just slotted straight into its Danielcode pattern. And no one is more amazed about that than I am. I didn't expect to see this level of accuracy, and it's quite extraordinary, isn't it? So here we are. We're back to Bitcoin. I'm switching between real Bitcoin and which is actually on a stable coin basis, but it's the real Bitcoin numbers, and then I'm switching to the futures contract. And there's all of it. Have a look at it. Blue line signal at the top. I call it banging the blue. You've heard me talk about that before. Blue line signal at the first pullback low. What happens at the bottom, the crash low? Another blue line signal. And target recognition all the way through. Absolutely amazing, isn't it? Little rally from the first pullback that stopped at the red line. There was actually a blue line. No, there wasn't. That was a TO3 buy. That's not a banging the blue buy. It stopped at the red line there. You can see, if your eyes are clear enough, smart enough, mine don't. But there was the buy signal. That's a TO3 buy signal. Whoosh, off it goes. Straight up. Couple of little ups and downs going through there. A little bit of difficult day-to-day trading, and then you get the sell signal. Down it goes. One bar counter trend, which is right here. This is this 1 bar counter trend. I'll put the cursor on so you can see it now. A client of mine who's just starting to do a tutorial, he is a real keen Bitcoin guy, and all of the other coins. He's deeply informed about everything to do with Bitcoin. He tried to buy that low as it was then, 1 bar above the low. And yes, there was a TO3, there was a Danielcode time signal to buy there. So up it went. He got long in that bar, but because he hasn't finished his Danielcode, he didn't realize there was also a time signal sell on that very bar. And as he said, he tried to write it out. He thought that would be a low for no good reason. He just doesn't know enough about trading yet. But he thought that would be a low, and he tried to write it out. He'd made a considerable amount of money trading Bitcoin in the weeks and months leading up to it, and he lost a lot. Pretty easy. If you don't know how to trade, you're going to lose your money. That's rule number 1. It's also rule number 2 and rule number 3. So he got wiped out, which will teach him to learn how to trade this thing. It's volatile. It's marvelous if you're on the right side of it. It's marvelous if you know the Danielcode, and I mean really know it. Done a Danielcode tutorial, know about time cycles. This stuff works on price beautifully, and even better on time. It's wonderful. And there you are. There's the whole of the Bitcoin chart. Now you see it running down into the red line and the blue line, both at the low. Banging the blue, you get a blue line buy signal right at that bottom bar. It creates the buy signal. Okay, remember always that the Danielcode is mute on quantum. Buys and sell signals can be anything from a 1-day counter trend to the start or end of a complete trend. Now I switch back to the futures. I'm trying to show you the comparison and showing you how beautifully this futures market is tracking the physical market. You can see we've done the high. You can see the high there in more detail. The one with the little blue diamond over it saying banging the blue on April the 14th. That's the Danielcode setup bar for the high. That's the bar that creates the buy signal valid for 3 days and of course it's elected 2 trading days later, ignoring inside bars. Down it goes, finds support at the Danielcode ratios, rallies all the way up. You get 2 buy signals in that rally up, the second of which really bites, and down it goes. And big momentum when it starts to get its run down. It pulls itself up a bit, and it stops at the first of the Danielcode blue lines going down. And it stops exactly on that blue line. When I say exactly, I mean a handful of points, a handful of ticks in these cases in the futures. Next run down, down it goes. This is the futures contract. It hits the red line, reverses from that, but look where it closes. It closes right on the Danielcode blue line. It's pretty unusual, but that actually gives you a blue line buy signal. It's not the blue line at the bottom, which is not close enough to create a Danielcode blue line signal, but the close is. It's a handful of ticks away from the actual Danielcode blue line. Absolutely marvelous. So here's Ethereum. It's called Ether at the CME. This is the Ethereum contract, I should say. You can see in its run up to the high, almost perfect target recognition on the close, just a handful of ticks away. Then you got that set up the blue line, and I put that bang in the blue on top of it to show you it also had target recognition at that high, and down it goes. Where did it stop? Danielcode red line, standard, straight out of the book. This is a more detailed look at that same chart. You see target recognition as it's going into the high. This is Ethereum. Down it goes. Eventually hits the Danielcode blue line down at 1764. Sets up a Danielcode buy signal, banging the blue. Off it goes. Whoosh. Nice big up bar. Where does that stop? Oh, pretty much right at the first red line it comes to. And then since then it's been crawling up, always following the Danielcode ratios. This is Ethereum futures, just to show you exactly the same thing. Target recognition going into the high. Blue line banging the blue, a blue line sell signal 2 bars or 1 trading day before the final top. You've seen this before. When we get these blue line signals, they're valid for 3 days, including the day of posting. In this case, this trade was elected 2 days later. Entirely valid, just exactly the same Danielcode ratios, Danielcode rules that you used to. Look at this run down. Look where it stopped. First closed, big important bar down. Panic, this is all over the place. No, it's not. It's actually tracking the Danielcode exactly. And what markets actually do is they're trying to talk to you. They're trying to tell you. You'll think this is nuts. But markets are trying to tell you what they're doing, and they're trying to tell you that all the time. The problem has been is that we didn't have the market's language until I invented the Danielcode. So we couldn't talk to the markets. We didn't know what the markets were saying. But you can see here very clearly, this is the rundown. We come to this first blue line here, around about 25.32. See if I can put a cursor on it for you. Right there. Look at that target recognition at the close. Just about perfect. And that's the market's way of saying to you, I know these Danielcode numbers and I'm tracking them. Look what happens the next day. See if I can get this thing to move without pulling out the spotlight. There it is. Hits that red line absolutely perfectly. Causes the big 1-day rally. Also, because of where a previous close was, that sets up a blue line buy signal straight out of the Danielcode textbook. Absolutely normal to everything we do. Have a look at this, folks. This is to just, looks like a spider's nest, doesn't it? It's not there to drive you mad. It's there to show you how these markets react to Danielcode time. You can see on the minor high, I might get the tool here so I can show you. Let's have a look where we've got here. Trying to remember where they put that tool. somewhere in here, there's a Danielcode tool. Bear with me, folks, it won't take long. Here it is. So I don't particularly like this, but it's the only way of showing it to you. This was that February earlier high here. I'm not sure if this was the February high or not. Yeah, it was February high. Look at that February high. There are 3 Danielcode ratios expiring, the 70, the 44, and the 29, all expiring exactly on that date right there. Then we got more at the lows. I haven't worried about that so far. I've now moved on to this important big high. Have a look at this. 1, 2, 3, 4 Danielcode time cycles, all expiring on that date, right on that date. 4 cycles. Down at 5, I'm sorry, the last one was the minor 14.8. 5 time cycles at that high, as well as Danielcode price with the blue lines. What do we say? You've heard me say it 1,000 times. When time and price are squared by being squared, that's a Gann expression that I borrowed. Nothing to do with how Gann used it. Gann used it to say time and price were on one of his angles. We used it to say that price is at a known Danielcode price level from the blue lines or the red lines, and it's also at a known Danielcode time cycle, which you can see here. There are at least 5 of them at the high, and there were more on the 6-day chart, the 12-day chart, the 24-day chart. All worked exactly the same. You've had at least 5 time cycles expire on that bar or the bar before, because these time cycles are valid to plus or minus 1 period. Now, interestingly, on Bitcoin, as opposed to the futures, time cycles are more accurate, because one of the drawbacks of futures contracts is they don't have any bars for Saturday, Sunday, or public holiday. So if we have a expiring time cycle from which the next time cycle will start, and that falls on a weekend, the program can put that icon that designates that time either on the Friday or on the Monday, whereas in fact, in real time, it happened on the Saturday or the Sunday, which is part of the reason that we have this variance of plus or minus 1 period. It should really be plus or minus 2 periods, but the program is more accurate than that. In Bitcoin and Ethereum themselves, not their futures charts, their physical chart, the one we're looking at now, these charts include Saturday and Sunday gig. You in particular will be very interested in that. In particular, the daily cycles are much more accurate because you've got the indicators on the Saturday or the Sunday if that's when they occurred. So you've got here massive numbers of time cycles expiring. You have, we've already seen a substantial number of target recognition, including the blue line target recognition to set up the blue line signal. So you've got price at a known Danielcode price level, and you've got time at a known Danielcode time cycle, in fact, at about 6 of them. That means that time and price are squared. And when time and price are squared, a turn is almost inevitable. And they got the turn. Down it went, little rally, where you'll recall earlier we saw that hit the red line and jump. Little rally into some more sell signals, down it goes. Look what happens at the low. 1, 2, 3, 4 time cycles at or 1 day before that low, which I've indicated with that blue arrow. Absolutely extraordinary. Perfect, isn't it? Let's move on. Here's our next. I've got to get rid of this wretched blue red dot. Okay, let's see if we're back to normal. Yes, we are. So now we can move on. And the next chart, this is Bitcoin futures, showing you the same thing. 1, 2, 3 time cycles. Sorry, I apologize. 4 Danielcode time cycles expired at the high. 2 Danielcode time cycles expired at the next high, the high after the first pullback, the rally high. 2 time cycles at that first low coming out of the all-time, not the all-time high, the most recent high, the April high. Down it goes into the crash low. 1, 2, 3 time cycles expiring at the crash low. And you've already seen that we had price down there. Perfect, almost perfect price recognition means the same thing. You have time at a known Danielcode ratio. You have price at a known Danielcode price level. Time and price are squared. A turn is almost inevitable. And there it is. Where we are. So I think this is probably near the end of this, folks. The end of the cryptocurrency bit at least, but there's lots more to show you. This is Ethereum. You can see the same thing. 1, 2, 3, 4, 5, 6, 7 cycles at the high or the trading day before or the trading day after the high. There's your 1 bar variance. Look what happened at the low. 1, 2, 3 time cycles all expiring within 1 day of the low. There's our variance. Absolutely perfect. Say no more. Let's move on. Ethereum futures. Hope this is the last chart. You think you've seen enough of this. And as you can see, absolutely perfectly perfect. Blue line sell at the top. Down into the blue line, DC target recognition on those 2 lower bars. Time cycles right in there, 70, 44, and 62. Wonderful stuff. 0.2 variance from target in Ether. Okay, back to the real world. So Biden's unveiled his budget today. It's $6 trillion. He's going to build back better. Apparently, you know all about this. But the sting comes, of course, expecting to raise taxes. You're going to have taxes higher, folks. This has got to be paid for somehow. At the moment, you're seeing all the gloss of how they're going to spend all this money. But don't forget, it all has to be paid for at some stage. And federal spending levels the Fed budget is at levels that to most people totally inconceivable. This is what happened at the repo today. Just so much money sloshing around with the players trying to park it at the Fed for 0%, incidentally. 485 billion in reserves parked with the Fed in exchange for the generous rate of 0, which was 35 billion overnight, up 134 billion in the past week, and the highest on record. Now, the interesting thing about all this is the Fed's upside down. Normally, in traditional markets, you would expect that as the market's been running up, Fed's been raising interest rates, which is one of their primary tools to support the market if and when the turn comes. The way this market's been, it looks, it's got that feel it's never going to turn, doesn't it? But there may be a surprise. But the Fed's already at 0 interest rates, absolutely awash with money. What happens if this market does turn and goes down? Well, it's got plenty of money to support the market. It might finish up like the Japanese central bank with outright purchases of ETFs and selected stocks. But it can't use its interest rate tool because it's shot. The ammunition's gone. That bullet's been shot long ago. So here we are. Let's just show you briefly, because I know we're up for time, but I hope you're still with me, of all the lovely money we've been making. Dean was talking about corn. We're going to see that in a minute. Here's the success, our success program on wheat. Have a look at it. Marvelous, isn't it? Move on. This is the Russell. A little more detail, a little bit choppy, but just look, it just keeps knocking off the money. 1,600 here, 400 there, 1,900 there, 700 there. Now, there are also some failures in here, but remember the failures are always less than 50% of the average true range. This is beans. We had a marvelous trade right at the edge of your screen, $5,500 up into the high, on the way down, a little small one. Then 2,000 into the low, then a losing trade in red. You can see that 77 ticks back up again today. This is corn. This is what Dean was talking about. Limit up in corn. Dean, go, say hoorah. You can say 3 times if you like. Isn't that grand? What a wonderful thing. DC target recognition at the blue bar, 602 carat 6. That was the low. That was DC target recognition. That day then led to a TO3 plus signal, which we posted for everyone. And it's just run up $1,770 today in one day. Isn't that something? Wow. Great trading, folks. Wonderful. This is Euro JPY. This was our TO3 plus buy signal for today. $800 straight up in 2 days. This is our British pound Japanese yen. This is an unusual one. Not many people got this trade. We had a TO3 buy here. $1,400 straight up, 1 bar. Look at the size of it. Massive, isn't it wonderful? Here's the New Zealand US dollar pair. $790 in 2 days into the third day today, into the inside bar. $790. This is the USD Japanese yen. It's the dollar yen cross. Look at this trade. TO3 plus buy on the inside bar, elected the next day on the outside bar, a nothing bar the day after really, and then whoosh, 753, 82 ticks straight up. Wonderful trading. That's our normal TO3 and TO3 plus signals. You should be, if nothing else, you should be subscribed to them. Look at this. It's just money, money, money. This is copper. This is a TO3 plus buy that was elected the next day on a very unpromising bar. It looked like it was a key. It was, in fact, a key reversal bar pointing down, but it stalled on the inside bar, and today it let go. $3,000 straight up in 2 trading days. That's money for you, folks, and it's going on all the time. This is UST bonds. Just showing you how it's reacting to the TO3 plus signals. Buy, sell, buy, sell. $1,000 in the last run up, 450 today. Just goes on and on, all from your standard Danielcode signals. Okay, so folks, remember Monday's Memorial Day. Most US markets will be closed. Forex will trade as normal. Act accordingly, either be flat or make sure your stops are in place. And remember, a lot of those futures markets, Forex will trade as normal. A lot of those futures markets will trade for a period of time in the morning. Danielcode tutorial, if you're interested in learning to trade properly, as I do, as I show you every day with these charts, if you want to really learn how to trade Forex and futures, I'm more than happy to teach you. Send me an email, tell me you're interested in it. I'll send you some documentation. If you're still interested, we can have a chat about it. Forex and futures trade almost identically. Interestingly, we actually started mainly as a Forex site. But over the years, we've developed mainly into a future site. But Forex, as you've seen in this webinar, still very, very important. Some of you interested in shorter time frames. I've traded 3-minute bars. I've traded 3-tick bars. I've traded short term for years and years. I don't recommend it because the most money is made trading daily bars. But we do have one of our super short-term traders with us today. If you want to learn about short-term trading, I can show you how to do the very best of short-term trading. So if you want to be a super trader and learn to do all this stuff for yourself, email me, jneedham@thedanielcode.com. If you want to send me your phone number and you want me to give you a call, happy to chat about your trading and what a Danielcode trading tutorial will do for you. So that's about us, folks. If you haven't already had a free trial, you're most welcome. Go to the Danielcode website, www.thedanielcode.com. Click on the free trial. Just hit the register button. Any issues, contact Terry at support@thedanielcode.com. He's our IT guru, and any problems you might have, he'll get you sorted out. This is our standard disclaimer, folks. I ask you to pay attention to it. It's very, very easy to lose money trading. If you're not a competent trader, I beg of you, I implore you, I get down on my knees because I hate to see money slaughtered. And if you don't know how to trade, you will lose your money. Do not risk real money trading until you are confident in yourself that you know how to trade. And I can tell you there's a whole bunch of folks who think they know how to trade, who keep losing their tail end. And eventually they come to me and I teach them how to trade properly. So that's it, folks, for me. That's all we've got for today. I hope you've enjoyed it. I hope you enjoy your weekend coming up, long weekend for Memorial Day. And I too am having a long weekend. Akshay, will it be possible to see a Bitcoin daily chart with a stochastic? Send me an email, Akshay, and I'll be happy to send it to you. Murph, glad you enjoyed it. Thank you, my friend. Raj, thanks to you also for being with us. Enjoy your weekend, folks. That's it for me. I put my orders on for tonight's trading. I'm off the clock, and I'll look forward to being back with you next week. All the best for now. Bye-bye.